You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We drilled it on budget, we drilled it on time, and we drilled it on target. What I mean by the target, 2.8 kilometers away, we hit where we wanted to hit the reservoir exactly where we were looking for. And this well will come on production somewhere between 4 to 5 million cubic feet per day. That final number will be decided by the production operator. And what they're doing right now is they're doing a long-term flow test. And the interesting thing is that all my conversations before were we would put this well on production towards the third week in November, whereas now our partner has said they probably can get this well on a lot earlier. And I mean within days. Now, I don't know 100% sure. And the minute that happens, the news release will be out. And that means we will be capturing a high price environment, a really good revenue, 2 weeks, 10 days earlier than we anticipated.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. And in today's show, we are going to get an update from Trillion Energy CEO Art Halleran. They are drilling their first wells at the SASB gas field in the Black Sea, just off the coast of Turkey, at a time when we're seeing all-time high European natural gas prices. So, Art, you've released a press release this week about some initial flow rates, and you have a presentation and an update for us. So please take it away.
Okay, thanks for having me on your show again. It's always a pleasure. The first thing I'll say is that I have this presentation. I'm actually going to Europe next week. And this is my presentation for the Europe people I'm going to be presenting it to. So I'm going to practice here. Most of the people have seen the early parts. I'll go through the early part fairly quick, and then I'll slow down and focus on the updates so people will know what's going on. So again, just in case people don't know, Trillion Energy, oil and gas producer in Turkey. This is a picture of our platform. The company highlights. We're fully funded, and that's important to know. We're fully funded for the 17-well program. I'm not looking for any money. I'm not doing any equity raises or anything. We have drilled our first well. It TD'd here just a short while ago. We ended up having a lot of gas. I'll talk about more in detail. Tested 8 million cubic feet per day. The company's 49% NPV10 for our 17-well program is in the order of 980 million. We have a large infrastructure, and we have, besides the 17 locations, a lot of blue sky and exploration. Economics are fantastic. OPEX less than $1, and we're still getting $31 MCF. And you can see that the price gas is just skyrocketing. Our focus is the SASB field. If you remember, we have 8 fields discovered, 4 were put on production, and so we understand exactly what's going on. The other 4 were not put on production, but were drill tested. And so we know exactly what's there. Large infrastructure in place that we own 49%, pipeline platforms and onshore facilities. So now we're getting into the stuff that's changed. So this map here shows you the 17 locations. And if you remember, we had 7 reserve locations followed up by prospects. And this map, the little green blobs are the fields that were discovered, were producing, still are producing, and you have the little platform sitting on it. The yellow are the fields that were discovered, drilled, tested. We have a reserve report, but never put on production. And the reason they weren't put on production is that they were not comfortable in 2007, 2011 for the extended reach for them to drill it. But now, the technology is such that we can do it, and you'll see that we did do it. And after those 7 wells, there's another 10 wells. That's the red blobs. They are like basically development wells, or not infill, but low risk wells. You can see right here, this is South Akcakoca-2. That's the well we just finished, and I'll show you in more detail. So what are we actually doing? So if you look, you see this part right here. This is Akcakoca field. This is West Akcakoca, South Akcakoca, Gulak. And this is in more detail. This is Akcakoca, Gulak, West Akcakoca, South Akcakoca. So what did we do? From the platform, we directionally drilled about 2.8 kilometers to tag into the known gas field. It's way cheaper doing it this way, faster to go on production, and it's easier for workovers. This was the most technical well, because we actually had a curvature in a horizontal and a vertical plane, and we're about 2.8 kilometers away. But we drilled it on budget, we drilled it on time, and we drilled it on target. What I mean by the target, 2.8 kilometers away, we hit where we wanted to hit the reservoir exactly where we were looking for. And the advantage to this is that now we complete the well and we just produce right up the casing to the platform, to all the existing infrastructures that we have. And then you can see that we also will be doing the Gulak and also West Akcakoca. And we also have a recompletion in here, and it'll all be from the platform. So what did we find? South Akcakoca-2, with the log evaluation, we ended up getting 33 meters. That'd be like almost 100 feet of gas-saturated sands in two big packages. We have three sands in the bottom package, and then there's a fair bit of space, and then we have the other sands. So what we did was, and this over here you can see are the log evaluations. That's the sand with gas, that's the sand with gas, and here we have a very large thick sand. This here again is the platform. We drill down, this is the leg to South Akcakoca-2. The future one will be Gulak, and then West Akcakoca. We drilled the well, then we went and perforated, and the minute we perforated, we turned it over to our partner, who are the operators of the production, and they did not want to vent any of the gas to the atmosphere, which is a very good policy. And so they actually, I should say, because they're very good at this, they did the flow test and had the flow go into our existing facilities, or a pipeline and onshore facility. And in that test, we tested 7 to 8.2 million cubic feet per day. Basically exactly what we expected. It's not the best well in all the fields that have been drilled so far, but it's about halfway between the best and the medium well. And this well will come on production somewhere between 4 to 5 million cubic feet per day. That final number will be decided by the production operator. And what they're doing right now is they're doing a long-term flow test. And the interesting thing is that all my conversations before were we would put this well on production towards the third week in November, whereas now our partner has said they probably can get this well on a lot earlier. And I mean within days. Now, I don't know 100% sure. And the minute that happens, the news release will be out. And that means we will be capturing a high price environment, a really good revenue, 2 weeks, 10 days earlier than we anticipated, which to me is very, very good. The fact that this test was able to be done within our facilities, in our pipeline, and not to the atmosphere allowed us actually to not have to use the rig for the long-term test. And so we skidded the rig over, and we are starting to work on our recompletion well, Akcakoca 3. So the really update is no surprises, because people always say, were you surprised what you found? No, it's exactly what we said, what we thought was there. It's a good well. It'll produce the lower sands we perforated. Those will produce probably for 10 years. But at the 5-year interval, we'll perforate the upper 11 meters. So we perforated 22 now. Then we'll perforate the upper 11 about 5 years from now. And this is just one of 17. All 17 will be very similar to this. We have that well that turned out. And again, this is to show you some of the economics that we have. If you remember what it was, 7-well reserve program, $9 was about 77 million US. At $31, that's 3 times that plus. So you're talking about 300 million. Development locations, that's about 100 million US at $9. So that's where we come up with almost $900 million US, Canadian NPV 10. And because we're starting to get high gas flow now, our OPEX is quite low. The fact that we have the well and it's producing now basically has just become more of an engineering issue. We've shown with our well that we've already drilled that we have it all solved. So again, people are asking about how is the price going to change? The price is softening a bit in the European market. If everybody remembers, we were happy at $9. So if we get 18, we're happy. If we get 31, we're happy. But we've been told that to expect $31 the rest of 2022 and through 2023. And if you look, program A will be upwards between, if you look at the $18 price, 7 million to 14 million free cash flow, our 49% a month. End of program A, end of program B, we're upwards to 14 to 24 million. And that will allow us to do a lot of other growth for the company. This just illustrates that our share value is severely undervalued. Right now, we're at 45 cents. Our market cap is 170 roughly. At $30 an MCF, we should be at $980 million Canadian. So just divide our float into that. You can see it's still undervalued. Our EBITDA for 2003 is 100 million. And just the share value, I mean, the gas value, our interest is about $1 billion. And a research analyst report by Bill Newman gives us a target price of $1.35. So I'm not going to get into the exploration or anything. All I want to illustrate is we've drilled our first well. It went perfect. We're going to get early cash flow. We're on our second well. Everything is going according to plan. High gas environment. They want to get away from the Russian gas in a situation where we're actually going to generate horrendously amount of cash. And that all being said, our share value is quite low. No mystery. Actually, a boring story. We're just going to drill and put a well on every 45 to 48 days, and that's pretty well it for the update.
Art, one question. In the news, we've seen in the last 30 days that Russia and Turkey are going to work together to form a natural gas hub in the Black Sea to supply Europe. Does that impact you at all?
No, it doesn't, because we own our own gas lines and facility, and the Turkish gas distribution line is at the edge of our property. So we distribute our gas to customers in Turkey, whereas a pipeline that you're talking about is just, transferring or having gas pass through Turkey from Russia to Europe.
In terms of the sabotaging of the Nord Stream, you mentioned before, but just for listeners that are new to this story, that's really not an issue because you're like 18 kilometers offshore of Turkey, right?
Yeah, that's correct. Yeah, and our pipeline is like 8 inches, and it's not going to be worth it, right? It's worth it to us, and we're in that little cove, so we're pretty well protected. Yeah.
Got it. And then you mentioned the share price. It's been trading in the mid 40-cent range Canadian. Yeah. Any commentary? How many millions of shares have you been keeping track of that have been trading in that range recently?
Yeah, the last time I checked we're like in 60 million range, and so I'm sure we're up into the 80 million range. So there cannot be too many more shares out there, except for me. I have sold mine, so I still have cheap paper. But there can't be too many shares below 40 cents because so many were bought at 40 cents. Like, it's amazing. And I guess one of the things I'll say is that what surprised me is that after this good gas well and thickness and good test, that we went up to 47 cents, and now we dropped off a couple of cents and so on, right? There seems to be a base there, and as we get more wells, I'm trying to establish maybe another base in the 50 to 55, 60 cent range.
And what specifically are institutions looking for? What feedback have they given you? Because you said it's a boring story. It becomes essentially a cash flow story, right? At this point?
Yeah. So you got it. The magic number is, a lot of them say by the time we've done the third well, they know it's old hat. It's done. It's a done deal type thing. And it's just, they're looking for cash flow. And like I say, they always say, "Are you surprised with what you found in this well?" And I feel like pulling the little bit of hair I got left on my head, saying, "No, it's not surprised. It's exactly what we said is going to be there, because we already know," right? So.
And any interest from majors or confidentiality? Yeah, interested in Trillion. You mentioned that smaller companies are bringing you projects, but anything you can discuss about majors and the interest in TCF?
Yeah, not at this time. Yet nothing's been brought to us, but we get a lot of properties across our table here to take a look at it, because now we're big news. I can tell you that for the over 2 or 3 weeks, we're the number one trader, not every day, but almost every day, number one trader in the Canadian Security Exchange for volume of shares, right? And that's the amazement. And actually, that's what the comments that the institutional people are saying, is that they like the fact that we are trading 3, 4, 6 million shares a day, right? They just say it's a lot better that than having a higher price, less shares out there and trading a couple 100,000, because they know that there's a huge appetite.
And then the next steps.
It's frustrating. Sorry. The next steps are continue to drill. So we're going to be doing Akcakoca-2. That takes about 12 days. Then we have to scoot the rig to the northern side of the platform. That's about a 4-day operation, because they got to decouple, move it away from the platform, and loop it around. We'll be drilling Gulak number 2. Then we'll be drilling West Akcakoca number 2. Then mobilizing to the southern platforms, and also let you know how things are connected here. And one of the southern platforms, Akaya, it was basically shut in, and so the pipeline was filled with brine water. They redirected the gas that we got in the test from Akcakoca South to blow the water out, so that pipeline now, that spur is ready for a new gas to go into it from the completion. And the other really interesting thing they said is that not one molecule that we have produced, we will not get money for it, because no gas was vented to atmosphere. We all still have that gas in our pipeline or facility.
All right. So we have a lot of boring cash flow generating news to come, it sounds like.
Yeah, that's right. It's just a conveyor belt now. It's just going to be the same thing, but the news will come out. It'll be, like I'll say, these wells will test. I've said it 1,000 times. They'll test between 7 to 10 million cubic feet per day. They'll go on production 4 to 5. And like, if we're producing at 5 and we get 2.5 million cubic feet per day, and we get $30,000 a million cubic, which is $30 an MCF, that works out to roughly $2.2 million our share a month, US, for that one well. So multiply it by 7.
Excellent.
Right. So, yeah.
All right. Well, Art, thank you for this presentation, and we'll be staying on top of this story.
Okay. Thanks a lot. I enjoyed the chat.